Macroeconomic uncertainty is weighing on consumer sentiment. Data shows it isn't hurting most Americans' summer travel plans. Deloitte's latest report finds that 53% of respondents plan to take leisure vacations this summer, up from 48% in 2024. So we want to get the inside scoop, the real pulse of this business from Elie Maalouf, who is the CEO of IHG Hotels and Resorts. Great to have you here in studio. We know that the company is the parent behind these major brands like Intercontinental, Regent, and of course Holiday Inn and Kimpton, which I've had the opportunity to stay at a few times. Great properties there. Just take us into the pulse of what you're seeing among consumers right now amid this summer travel season that's just kicking off.
Well, thanks, Brad. It's great to be with you. The amazing thing about travel is, despite uncertainty around the world, you may have, trade tensions and some turbulence across many different sectors. Travel continues to grow. Mm-hmm. The predictions are for travel to increase domestically in the United States this year over the summer. UN Tourism just reported last week that international travel in Q1 of 2025 was up 5%. Over 2024. I mean, this is despite all the tension out there, 5% growth. Now, they may be going to different parts of the world, but people are moving, people are traveling. Business travel's back up. Groups and meetings travel's back up. The World Travel and Tourism Council reported that, last year was a record year for global travel and tourism. This year is going to be another record year. Uncertainty is the only thing we can be certain about. Yeah. Brad, is always going to be there, but people love to travel.
When you hear from customers who you're engaging with and their accommodations, which are a core part of their travel plans here, there's typically kind of two frames of mind that they're working through right now. And it's either, do I stay at one of the historic hotels, resorts that I've accumulated so many points at, or do I stay at a home listing type of opportunity? And how are you kind of communicating with customers the value add from the IHG perspective?
Look, we have 145 million members in IHG One Rewards now, up nearly 50% since 5 years ago. And it's growing double digit a year. These are people that want to travel with IHG's 20 brands, 6,700 hotels around the world. Another 2,300 we have under development. Shared home rentals is a real business. Been around a long time. It used to be just, friends talking to friends or people looking in the newspaper and finding that shared home rental. So it's not a new business. Mm-hmm. It's just now on technologically advanced platforms and doing quite well. They're kind of different businesses, right? They've prospered over the last 10 years. And hotels have continued to prosper. Mm-hmm. So there is some concentric overlap in some places, but you go to London, you go to New York City, you go to Paris, you go to Miami, you go to Tokyo, hotels are busy, hotels are full, and shared home rentals are doing well. It's really not competing in the same sphere.
For consumers right now, is this a consumer on aggregate that is trading down in their type of accommodation experience? How are they really being discretionary about some of those dollars that they're spending?
We get that question a lot because there's a lot of talk about, the consumer mindset, the consumer sentiment. There are two sort of hard to reconcile things going on right now. Consumer sentiment surveys, except for the one that came out last week in the US, have been down. Consumer spending has been up. Why? Unemployment is low, employment is strong, job reports continue to be strong, GDP continues to grow, bank balance sheets, corporate balance sheets, and residential home balance sheets are in good shape. Real wages are growing. So in general, the consumer behavior is actually much better than what they say their sentiment is, which is really what we want to see. And then when we look through our portfolio, we actually don't see the trade down. Yeah. We see our upper end, our luxury and ultra luxury doing very well. We see our everyday travel, Holiday Inn Express, Holiday Inn, Avid, Atwell doing very well. If you look at our first quarter revenue report that we put out at the end of the first quarter in April, what did we see? We saw 7% RevPAR growth in Intercontinental. We saw 3.5% RevPAR growth at Holiday Inn Express. Both ends doing pretty well.
And so when you think about some of the brands that our viewers see up on screen just a moment ago, if we could toss that back up, as you think through the pipeline that you have right now, and this is something that we hear from a lot of different hotel management firms and companies and accommodations businesses, is how many rooms they have in pipeline and adding to the capacity. What's that look like for IHG? And do you anticipate that you'll need to purchase other smaller players out there to add into that pipeline, or is that something that you view as having the cash, the capital right now to invest further in and home grow those?
That's a great question, Brad. Let's look at the fundamentals. Travel continues to grow for two main reasons. One, GDP grows around the world. Still, projections for GDP growth for this year and beyond are 3 to 4%. The middle class continues to grow around the world. A little more east than the West, but it's still growing around the world. Those two propel travel around the world, the growth of GDP and the growth of middle class. Against that, we have 6,700 hotels open, another 2,300 under development. Just last year, we signed over 700 new hotels and we opened over 370 hotels. So where do we grow? We grow mostly by growing our existing brands. We got 20 brands, but once in a while we add a new brand. In the first quarter, we added Ruby, this premium, urban, lifestyle, really cool brand that's today just in Europe, 20 hotels open, another 10 in pipeline, but we're going to take it to the US and take it globally. Mostly we grow through our existing brands, we add to our new brands, but if you look at the upside, today, despite being 6,700 hotels, 80 years in the industry, we have only 4% of the global share of existing rooms. Only 4%. We have 10% of the pipeline. So we're consolidating growth into the future, but the headroom is very, very high. With only 4%, we got a lot of room to grow.
Just lastly, while we have you here, Elie, I wonder, compared to non-tariff talk times in the past, are we seeing international travelers be a little bit more apprehensive to travel to certain parts of the world, knowing that their countries are in negotiation and there might be less favorability about how they are received when they go to certain regions of the world?
There was some of that at the beginning of the year.
Okay.
March was down in terms of European travel to the US, but April was up again. It's just amazing how people bounce up, go forward, keep traveling. Let's keep this in mind. First quarter international travel was up 5% over the first quarter of last year. People may be picking different destinations, but they're still traveling. And I just met with our top 60, 70 leaders around the world 2 weeks ago in Berlin. And they said, what about all this travel tension? What about this trade tension? What about all this uncertainty we're dealing with? I said, you're right, we got uncertainty. Look at our first quarter results. We still grew 3.3% RevPAR around the world. Right. But let's go back 2 years when we last met. What did you guys ask me about? You guys asked me about uncertainty. Sure. Inflation was high, interest rates were high, elections around the world, didn't know how the world was going to shape up. How did we do over the last 18 months? Very well too. The only thing I'm certain about, Brad, is we'll always have uncertainty, but we also have growth.
And so lastly, I guess, are the bookings right now going forward looking more like the slump that you mentioned in March or the rebound that we saw in April?
Well, the figures I stated was inbound from Europe to the US was up in April. It was down in March, but it shows you that there's a rebound. Now, domestic travel for the summer in the US is looking up according to the industry forecasters. We're pretty optimistic about the rest of the year.
Elie, great to have you here in studio with us. Thanks for taking the time.
Great to be with you, Brad.
Absolutely.